The UK economy is on the verge of its biggest collapse in decades, and it's already started. Inflation is soaring, job losses are climbing, and everyday life is becoming more expensive by the minute. But here's the terrifying part. This isn't a distant future issue. It's happening right now, and you might not even see it coming. Think about this. Energy prices have doubled, the housing market is in chaos, and unemployment is creeping up faster than anyone anticipated. Businesses are struggling, families are barely getting by, and the financial system is teetering on the edge. The signs are everywhere, yet most people are too focused on their day-to-day lives to realize what's at stake. How long can you rely on your savings, job, or investments before the whole system unravels? The real question is, are you prepared for what's coming? Because if you're not paying attention, the collapse could hit you harder than you imagine. The perfect storm is already brewing, and it's not just inflation or rising debt. It's a combination of things: unpredictable politics, environmental disasters, and shattered financial systems, all crashing together at once. In this video, we'll reveal the 10 shocking reasons the UK is heading for disaster, and more importantly, how you can survive it. The clock is ticking. What will you do before it's too late? Number 1. The impact of global inflation. Global inflation is one of the most significant drivers of the economic collapse we're seeing unfold in the UK in 2025. Inflation rates worldwide are at historically high levels, and the UK is feeling the effects more than ever. The pound's value has taken a substantial hit, and this is making everyday goods much more expensive. From food to fuel to basic household items, prices are climbing faster than wages can keep up. Now, you might be wondering, why is global inflation affecting the UK so badly? Well, the UK is heavily reliant on imports, and with inflation soaring globally, the cost of importing goods has skyrocketed. This means that everything you buy from abroad, like electronics, clothing, or even food, costs more than it used to. The currency devaluation only makes this worse, pushing prices even higher for consumers. But it's not just about rising costs. It's also about wage stagnation. Many workers are not seeing pay increases that match the pace of inflation. So even if your job is stable, your money isn't going as far. Energy bills have gone up, transport costs are higher, and the cost of basic utilities has surged. This is leaving households with less disposable income, which impacts their overall quality of life. For businesses, it's also a struggle. They face increased production costs, but can't always pass those costs onto consumers without risking losing customers. This leads to slower economic growth and potentially even layoffs or hiring freezes. What can you do about it? To protect yourself, consider adjusting your budget by cutting down on unnecessary expenses. Focus on saving more and investing in things that hedge against inflation, such as real estate or commodities like gold. Additionally, start thinking about how you can diversify your income sources to cushion yourself from the pressure of rising living costs. In the next section, we'll look at another major factor contributing to the looming collapse: the unstable housing market. Number 2. Unstable housing market. The housing market in the UK is one of the key areas that's sending shockwaves through the economy in 2025. For years, owning property in the UK has been seen as a safe bet, a solid investment. But that perception is rapidly changing. Property prices have been incredibly volatile, and many experts are predicting a housing bubble that's just waiting to burst. So why is the housing market so unstable right now? First, let's talk about rising mortgage rates. The Bank of England has been increasing interest rates in an attempt to tackle inflation. As a result, mortgage repayments have surged, making it more difficult for first-time buyers and homeowners to afford their homes. People who could easily secure a mortgage a few years ago are now facing higher monthly repayments, and some are even being pushed to sell their properties. The housing supply is also causing issues. There simply aren't enough homes available to meet demand, especially in desirable areas. But even with high demand, the high mortgage rates are preventing many potential buyers from entering the market. This mismatch is creating a slower market where fewer transactions are happening, but prices are not necessarily falling fast enough to match the reduced buying power. Another critical issue is home equity. Many homeowners have seen their property values rise steadily over the years, but now, with the rising interest rates and an overall decline in market activity, their homes could lose value quickly. People who bought at the peak of the market may find themselves underwater, owing more on their mortgage than their property is worth. For homeowners looking to sell, the market is also unpredictable. Sellers are struggling to find buyers willing to pay the asking price, leading to longer selling times and potentially price cuts. So how can you protect yourself? If you're planning to buy a house, think carefully about your financial situation and future affordability. Renting might be a better option if you're not ready for the risk. For homeowners, consider locking in a fixed-rate mortgage to safeguard against further interest rate hikes. Number 3. Rising unemployment rates. One of the most alarming signs of an impending economic collapse in the UK is the rising unemployment rate. While the economy has been struggling in recent years, the next phase could see even more widespread job losses, hitting industries and individuals hard. The root causes of this growing unemployment crisis are complex, but they all point to automation, global economic pressures, and the changing nature of work. First, let's address the elephant in the room: automation. Many sectors, particularly in manufacturing, retail, and logistics, are increasingly turning to machines and artificial intelligence to replace human workers. Robots, AI systems, and automated technologies are more cost-effective in the long run. And as businesses try to cut costs, labour displacement is becoming inevitable. Jobs that were once secure are now at risk, and many workers, particularly those in lower skilled positions, are finding themselves pushed out of the job market. At the same time, the global economy is not helping matters. Geopolitical instability, trade wars, and rising inflation are creating economic turbulence worldwide, which directly affects UK businesses. Retail giants, hospitality sectors, and tourism industries are seeing significant declines in demand, forcing many to lay off workers in an attempt to stay afloat. The uncertainty around global trade agreements and supply chains means that companies are pulling back on hiring and expansion plans, further contributing to the rising unemployment numbers. Moreover, there's the issue of the gig economy. More people are turning to freelance work, temporary contracts, or part-time jobs as full-time. Stable employment becomes harder to come by. While this might sound like freedom, it's also less secure. Freelancers and gig workers don't always have the same benefits or job security as traditional employees, leaving them vulnerable in times of economic downturn. So how do you protect yourself from this rising unemployment crisis? Start by diversifying your skill set. Consider learning tech skills like coding or data analysis, or pursuing roles in growing fields such as sustainability or renewable energy. These sectors are expected to see growth, offering job stability in an otherwise unpredictable economy. Number 4. The cost of energy crisis. The cost of energy in the UK is becoming one of the most pressing issues of 2025, and it's directly contributing to the economic collapse that's looming over the country. Energy prices, particularly for gas and electricity, have surged to unsustainable levels. For households and businesses alike, this increase is putting immense pressure on already strained budgets. Let's break down why this energy crisis is so critical to the UK's economic stability. First, the global energy shortage is a key factor. The UK relies heavily on imports for its energy needs, and geopolitical tensions, especially related to Russia and other major energy producers, have severely disrupted energy supply chains. This disruption has made it more difficult to secure affordable energy for consumers, and as demand increases, prices follow suit. The result? Skyrocketing energy bills for both individuals and businesses. But it's not just about supply issues. There's also the issue of the transition to renewable energy. While the shift towards green energy is crucial for the future, the infrastructure required to fully adopt renewable sources like solar and wind isn't fully in place yet. This transition phase has left the UK vulnerable, relying on outdated and expensive energy infrastructure that's failing to meet the needs of the population. In the meantime, fossil fuel prices are fluctuating wildly, causing further instability in energy pricing. On top of that, the cost of living has already been rising, and the additional burden of increased energy costs is pushing many families into financial hardship. With colder months ahead, heating costs are expected to skyrocket, putting more pressure on the already vulnerable. Businesses too are struggling. Small businesses that rely heavily on energy for operations are being hit hardest. Some may even face closure if they cannot manage rising utility costs. So how can you weather this storm? Investing in energy-efficient appliances like LED bulbs, energy-efficient refrigerators, and smart thermostats can help cut costs. You might also consider looking into solar panels or other renewable energy solutions to reduce your reliance on the grid. Reducing your energy consumption and adopting green solutions is a smart move, not just for the environment, but for your finances in the long run. Number 5. Debt crisis, both personal and national. The growing debt crisis in the UK is a ticking time bomb that could accelerate the economic collapse we're seeing in 2025. The UK is facing mounting national debt, but it's not just the government that's struggling. Household debt is also at an all-time high. Both levels of debt are creating a dangerous combination of financial instability that's impacting everything from individual savings to national economic health. Let's start with the national debt. The UK government has been borrowing extensively to fund various programs, including pandemic relief, infrastructure projects, and more recently, to cover rising public sector costs. As a result, the national debt has ballooned to unsustainable levels. Interest payments on this debt are now consuming a significant portion of the government's budget, which could mean cutbacks in essential services, higher taxes, and an overall strain on the economy. But the issue doesn't stop with national debt. On the personal level, many UK residents are facing their own financial crisis as household debt reaches record highs. People are taking out loans, maxing out credit cards, and taking on more mortgages than they can afford, often to keep up with the rising cost of living. With inflation driving up prices, wages not keeping pace, and interest rates increasing, many people are now struggling to make their monthly debt payments. For some, it's already too late. Defaults are rising, and more families are facing bankruptcy. This rising debt creates a vicious cycle. As interest rates climb, people and businesses alike are paying more to service their debt, which leaves less money for discretionary spending. This puts downward pressure on the economy as less money circulates. Additionally, businesses are scaling back or even laying off workers to deal with rising operating costs, making unemployment rates rise even higher. So what can you do to protect yourself from the debt crisis? Start by focusing on paying down high-interest debt, like credit card balances. Consolidating debt or refinancing loans can also help lower your interest payments. Make sure your budget accounts for unexpected costs and try to create an emergency savings fund to cover any sudden financial shocks. Being proactive about debt management will help safeguard your financial future in this uncertain time. Number 6. Political instability. One of the key factors driving the UK towards an economic collapse in 2025 is the political instability currently gripping the nation. Over the past few years, the UK has witnessed a turbulent political landscape, with frequent leadership changes, shifting policies, and unpredictable decisions that have caused a great deal of uncertainty. This political turmoil is having a direct impact on the economy, and it's creating a ripple effect that could worsen the situation in the coming years. First, consider the ongoing Brexit aftermath. Although the UK officially left the European Union in 2020, the long-term economic consequences are still unfolding. From trade disruptions to increased tariffs and labour shortages, Brexit continues to affect businesses and workers across the country. The uncertainty surrounding trade deals and the UK's relationship with Europe is creating a volatile environment for both investors and consumers, who are unsure of how things will evolve in the coming years. But Brexit isn't the only issue. Political fragmentation has led to a lack of clear leadership, with frequent changes in government and shifting party ideologies. This makes it harder for businesses to plan for the future. Policies regarding taxation, public spending, and economic recovery have been inconsistent, leaving businesses and the public unsure of what to expect. Political gridlock, where different factions are unable to agree on key economic issues, has made it difficult to implement coherent policies that could stabilise the economy. Moreover, government instability often leads to market volatility. Investors shy away from unstable political environments, which can lead to declining investment and capital flight. In turn, this impacts everything from the stock market to the value of the pound, contributing to the overall economic instability the UK is currently facing. So how can you shield yourself from the effects of political instability, stay informed about the political situation and how it may affect your investments? Consider diversifying your financial portfolio and investing in assets that are less susceptible to political turmoil, like precious metals or real estate. By being proactive and informed, you can reduce the risks associated with the ongoing political upheaval. Number 7. Supply chain disruptions. One of the most critical reasons behind the UK's economic collapse in 2025 is the ongoing supply chain disruptions that are impacting nearly every sector of the economy. These disruptions have caused widespread shortages, delays, and rising costs that are trickling down to consumers and businesses alike. The pandemic, political instability, and ongoing global challenges have combined to create a perfect storm, leaving supply chains fragile and vulnerable. Let's talk about global supply chain bottlenecks. For years, supply chains relied on smooth global trade routes to deliver goods efficiently. However, due to factors like the pandemic and geopolitical tensions, these trade routes have been severely disrupted. Ports around the world are congested, there are shortages of shipping containers, and logistical delays are becoming the norm. For the UK, a reliance on imports for everything from food to electronics means that these delays have a direct impact on the availability and price of goods. Additionally, the UK's labour shortages are contributing to the supply chain crisis. Brexit has resulted in fewer EU workers in key industries, such as agriculture, construction, and transportation. With fewer workers available to transport goods or pick produce, this shortage has resulted in delays and higher production costs. Farmers, manufacturers, and retailers are all feeling the pinch as supply chain inefficiencies drive up costs, ultimately leading to higher prices for consumers. The energy crisis also exacerbates supply chain issues. With the cost of energy climbing, it's becoming more expensive to transport goods across the country. The rising price of fuel affects not only shipping, but also warehousing and logistics, as the cost of running warehouses and transport vehicles becomes unsustainable for many companies. For consumers, these disruptions are having a direct impact on product availability and prices. Basic goods, including food and household items, are in short supply, and prices are climbing. If the disruptions continue, the UK could face widespread shortages and even more inflation. So what can you do to prepare for these disruptions? Start by stockpiling essentials where possible, especially non-perishable items like food and toiletries. Diversify where you source your products from and be proactive in managing your personal supply chain. Number 8. Weakening financial institutions. The stability of financial institutions is a cornerstone of any healthy economy. But in 2025, UK banks and financial systems are facing significant challenges that could trigger a full-blown economic crisis. The recent financial instability seen in some major UK banks highlights the growing concern about their risk exposure and liquidity. If the situation worsens, it could lead to bank failures or severe restrictions on lending, which would have a ripple effect throughout the economy. First, let's talk about risky investments. Many UK banks and financial institutions have made high-risk investments in volatile markets, such as cryptocurrency, startups, and emerging markets. While these investments can yield high returns, they're also prone to sharp declines during economic downturns. With the growing uncertainty surrounding global markets, these financial institutions are now facing large write-downs and losses that they didn't anticipate. If more banks begin to report significant losses, it could shake public confidence in the financial system. Moreover, interest rates are rising, which places additional strain on banks. As the Bank of England raises rates to curb inflation, banks will face increased borrowing costs. This could reduce their ability to lend to businesses and individuals, stalling economic growth. If banks tighten lending policies, businesses will find it more difficult to obtain financing for expansion or investment, further slowing down the economy. Another issue contributing to the weakening of financial institutions is lack of transparency. Many people are unaware of the true financial health of their banks, making it harder to trust the system. If a major financial institution were to fail or face a liquidity crisis, it could cause a run on the bank, where customers rush to withdraw their money. This could create a contagion effect, leading to panic and broader economic instability. So how can you protect yourself from the potential fallout of weakening financial institutions? Consider diversifying your assets and keeping your funds in multiple accounts or banks. It's also wise to invest in precious metals or other safe haven assets that are less susceptible to financial market volatility. By staying informed and being proactive, you can reduce the impact of financial system instability on your personal finances. Number 9. Declining consumer confidence. Consumer confidence is often seen as a barometer for economic health, and in 2025, the UK is facing a significant drop in consumer sentiment, which is putting immense pressure on the economy. When consumers lose confidence in the economy, they are less likely to spend money, which in turn slows down economic growth. The decline in confidence is driven by a combination of rising costs, political instability, and uncertainty about the future. First, let's look at how rising inflation is affecting consumer sentiment. As prices for everyday goods and services continue to rise, households are feeling the squeeze. Basic necessities like food, energy, and transportation have become significantly more expensive, leaving people with less disposable income. With wages not keeping pace with inflation, many consumers are feeling financially stretched and uncertain about their purchasing power in the future. This leads to reduced consumer spending, which accounts for a significant portion of the UK's GDP. In addition to the financial strain, there's a growing sense of political instability that's contributing to a lack of confidence. With Brexit, changing leadership, and an unclear economic strategy, many UK citizens are unsure of what the future holds. Political uncertainty directly impacts the economy, as businesses become hesitant to invest, expand, or hire new workers when they don't have a clear picture of the political and economic landscape. This uncertainty breeds pessimism among consumers, making them more likely to delay major purchases, like homes, cars, or luxury items. Lastly, consumers are also fearful of job security. With unemployment rates rising and more people working in gig or temporary jobs, there's a sense that the stability that many once took for granted is slipping away. Job loss or underemployment causes people to tighten their belts, making them more cautious with their spending and less willing to invest in long-term purchases. To protect yourself from the impact of declining consumer confidence, it's important to manage your finances carefully. Focus on building an emergency savings fund and reduce debt to give yourself more flexibility in uncertain times. By staying financially prepared, you can weather the storm when consumer confidence dips and continue to thrive despite the economic challenges. Number 10. Climate change and environmental disasters. As we move further into 2025, the effects of climate change are becoming impossible to ignore. and they're increasingly contributing to the UK's economic challenges. From extreme weather events to rising sea levels and environmental degradation, the UK is facing a growing number of climate-related risks that could have long-lasting economic consequences. These environmental changes are straining the country's infrastructure, agriculture, and public services, and they're making it harder for businesses and individuals to adapt and thrive. One of the biggest impacts of climate change is the increasing frequency and intensity of extreme weather events such as floods, droughts, and storms. In 2025, the UK has already seen several severe flooding incidents, causing significant damage to homes, businesses, and infrastructure. The cost of repairing this damage is rising, and insurance premiums are also climbing as a result of these more frequent disasters. This puts additional strain on both personal and government budgets, limiting resources for other economic needs. Agriculture is another sector being hit hard by climate change. Extreme weather patterns are disrupting growing seasons and decreasing crop yields. With floods damaging crops in some areas and droughts affecting others, food prices are climbing. This leads to a food security crisis as domestic production struggles to meet demand. At the same time, the UK's reliance on imported food means that global disruptions also impact local availability and prices. In addition to this, rising sea levels are threatening coastal areas and infrastructure. The cost of building flood defences and maintaining coastal infrastructure is skyrocketing, and areas close to the sea are becoming more vulnerable to flooding. This environmental threat is creating economic instability, especially for businesses located in affected regions. So how can you protect yourself from the economic fallout of climate change? First, consider how climate risk might affect your investments. Real estate in flood-prone areas, for example, could lose value, while properties in safer locations could see more demand. It's also wise to focus on sustainability and green solutions. Investing in renewable energy, energy-efficient homes, and climate-resilient industries will not only benefit the planet, but can also offer financial security in uncertain times. Being proactive about environmental risks can help you stay ahead of the curve and protect your financial future. The UK's economic future is hanging by a thread, and the warning signs are impossible to ignore. If you're ready to protect yourself from the coming collapse, it's time to act now. The 10 reasons we've highlighted are just the beginning. There's so much more to understand and prepare for in these uncertain times. But here's the thing, knowledge is power, and by staying informed, you can stay ahead of the curve. If you found this video eye-opening and valuable, don't forget to hit that subscribe button. It's just one click to get more in-depth, hard-hitting insights like this. We pour hours into creating these videos to bring you the facts that matter most. So show your support and become part of our growing community. Now, we want to hear from you. What do you think is the biggest threat to the UK's economy? Drop your thoughts in the comments below. Let's keep this conversation going. Your voice matters, and together, we can navigate these tough times smarter.